Good evening, folks, and welcome to the Contrarian Trader. It is Sunday, September the 27th, 2009. Folks, before we get into last week's trade, where we think the market's headed in the coming week, I just want to touch upon a call made by Jim Cramer made on his Thursday, September 24th show. He made a call on NVEC, symbol NVEC. It's a nanotech company. Now, people ask me why I started the Contrarian Trader, and this is a, one of the prime examples of why. It's irresponsible calls made by respected pundits on TV. Now, to Jim Cramer's credit, he did say it was extremely speculative. Okay, so I'm not going to completely bash to that, but what he did was he gave the okay for Bob from New York to, oh, I'm sorry, Andrew from New York to buy this stock when the stock had declined that day alone $3 per share. Now, some might say, well, he told him to buy if it was on sale, Bob. Okay, fair point. But a closer look at how the stock traded that particular day, and you'd see that volume had risen considerably over the previous day's down volume. And it had closed, if you take a look at the volume bars here, here's the volume bars. Here's Wednesday, this is Thursday, then Friday again down big. Although we did see it come off of its bottom. Now, it closed down another almost 3%, 2.93%. Intraday, it was down well over 3%. But it closed off its lows and recaptured the lower band of its uptrend line. Now, if Cramer would have said, listen, you're at the bottom of the uptrend line. Let's see if it can hit 52.50. Put your bid in there just below it, but keep a tight trailing stop loss order in. That I could respect, because what he's doing is taking a look at the chart and seeing where buyers have come in the past, back here, back here, back here, and back here, to bid the shares up higher. The risk to reward ratio, where you were to have entered at the $52.50 range on Friday, would have been a far better call to have made by Jim Cramer, but he chose not to do it. He just said, oh, go ahead and buy it. All right, so if you did that at the open on Friday morning, you'd be down almost 3% on the day. Intraday over that, and you probably would have sold out of the position. You'd be down 3%. Suppose this is the one stock, this guy's first stock that he was ever going to buy. He takes a 3% loss on the first day. Do you think he's coming back anytime soon to buy that stock or any other stock? I doubt it. It's irresponsible, and I think it's repulsive what he did, making that call. So when should he have told this guy to buy the shares? Back in January at $20.11. That would have been a great call. Or through these retests of the lower band of the uptrend line. Anytime during that duration, not on Thursday afternoon when it broke below its 50-day moving average. That's a technical breakdown. This stock is rolling over. You have a stock here that saw a high of $63.64. It collapses, finds support at the 50-day moving average, attempts to rally back, can't do it, breaks down to a new low. This is a stock that's breaking down. Do you want to, if you want to trade it, fine. Do it. I personally wouldn't do it. I think the stock is going to probably rally back a bit, but it's going to proceed lower. If it fails to take out this, say, $59 range right here. Now, if you want to enter this position here, put your stop loss, say, at just below the lows of the day, which is $50.13. Make it $49.97 where you put your stop loss in. Stick to that stop loss, and if you get stopped out, keep your loss small. No big deal. It's part of the game. But please don't listen to these off-the-wall calls. This is what happens. But when you watch these shows, just please be careful. And onto the market. So I'm going to post this video here on the website. So if you want to go to contrariantrader.com, you can watch the video of Jim Cramer. I'll post it there for you. Okay, let's take a look at last week's trade. Let's take a look at the weekly chart of the S&P 500. Now, I mentioned in last week's commentary that 1050 was resistance, and then became support. We broke below that 1050 support level. Now we're looking at 1040 as support level. We didn't hit the 1100 mark. I wouldn't be a bit surprised to see them try to rally this market back up again this week. Why do I say that? It's because this is the end of the third quarter. Now, what you're going to see in the coming days is window dressing done by fund managers who didn't participate in this entire rally. And they're going to want to send out statements to their shareholders, and they're going to want to show those shareholders that they own Google throughout the whole time, or Baidu throughout this whole third quarter. Even though they really didn't, it'll show in the statement that they did. So just beware. This is the game that the fund manager is going to play Monday through Wednesday. So just be careful. It's called window dressing. Don't get caught up in it. It's going to be a false rally, probably a rally on very light volume, and I would be a bit surprised to see the market roll over as we head into the fourth quarter. So please be careful. Let's take a look at the financials. The financials last week, I mentioned in last week's commentary that we were short the financials using FAZ, which is Direxion Short Financials Fund. We are short the financials. We remain short the financials because we think that that's where the weakness is going to lie. So we have a profit in the FAZ. We're looking good with that trade. We're going to stick with it. This is another reason why I think that the market's going to rally a bit this coming week. We saw the VIX rally up last week. You see the shadow on this candlestick pattern here. It did hold below its 50-day moving average. We may see it come back down, retest the lows, and then proceed to rally higher. That's our personal opinion. The transports, which had been a real leader in this market, really gave it up big time last week as it hit resistance at the 4,000 level. So that's the level to watch. If it can't break out above there again, watch the lower band of this uptrend line. If we break below here, you're going to see this market correct very, very hard. So please be careful. This is a weekly chart that we're looking at. Very, very critical charts. Using weekly charts. That's what I like to use when I prepare the week ahead commentary. Bon-Ton Stores. We opened a position in Bon-Ton Stores last week, a short position. I mentioned it last week. We sit with a profit in that trade. You're seeing some resistance coming in here at the 50, on the RSI at the 50 level, which is neutral zone. We may see a rally on Bon-Ton Stores. We're going to keep our stop loss fairly tight on this trade. If it rolls over again, or appears to, we'll add more to that position. I received a couple of emails last week. Do you still think it's time to go short? My answer is no. No, don't add to your positions if you are short. Don't open up new positions if you're short. What I would do is I would wait to see if this market could rally. If it doesn't rally, if it can't break out to new highs, then that's the time to open up new short positions. So if you have questions with regard to how you want to proceed with this week's trade, if you want to open up new short positions, email me, okay? Please, if you don't subscribe, send me an email, ask me my opinion. I'm more than happy to help you. I would rather you not lose money than just throw money blindly at this market. It's too tricky right now. I don't expect any market to go down immediately, okay? You're going to see your counter trend rallies, but I think at the end of the day, as we proceed into the fourth quarter, we're going to see that this market is going to roll over and proceed lower. You'll have a better risk to reward entry point to get short this market. So please, shoot me an email before you do that. This is one bit of interesting trivia I found out this week, and this is one of the main reasons why this market is so suspect. This is on CNBC.com. For all my complaints about CNBC, they're a very good website. The Federal Reserve is actually the #1 bondholder, Treasury bondholder, the #1 debt holder for the United States, which I find amazing. That means that you have the Federal Reserve that is printing money, and then you have our own government buying back their own treasuries. That's a house of cards waiting to collapse. Please, get short with me. Let's stick together on this trade. Let's get short this market, make money on the downside. Your fund manager is never going to tell you when to sell. He's always going to tell you when to buy. It's because he's going to want to sell while you're buying. Okay, so please use caution and stick with the contrarian trader and send me an email with any questions. Thank you. Have a great trading week. Bye-bye.